Hey everyone, Gigacloud Technology reported first quarter 2024 earnings results, which I will review in this video here. I'll also update my buy recommendation for Gigacloud Technology stock in this video. Coming into the quarter, I had Gigacloud stock rated as a buy. I'll update that recommendation and let you know if it's still a buy. I'll also go over some big picture items from Gigacloud, its critical financial metrics, and an interesting strategic change from Gigacloud technology that you're not going to want to miss if you're interested in this stock. So let's start with the review of the earnings.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Gigacloud reporting total revenues of 251 million. That was an increase of 96.5% year over year. But remember, the company recently made a couple of acquisitions, so including the results from those acquisitions are making the revenue growth look stronger than it would have been otherwise. Gross margin grew to 26.5%. That was up 340 basis points year over year. Solid improvement to be sure. And more importantly, net profit of 27 million increased 71% year over year from the same quarter the prior year. So net profit margin over 10%. If you divide the net income of 27 million by the total revenue of 251 million, that will give you the net profit margin, and you'll notice it's over 10% and growing for Gigacloud technology. That's good news as well. The balance sheet remains strong, 196 million of cash and marketable securities now. That was up 6.5% from December of 2023. Remember, the company used all cash to make those two acquisitions it made last year. Additionally, the company has announced a share buyback program. So it's using some of this cash to buy back its own shares, and it has plenty of cash to do so. And since it's profitable, it will likely generate more cash to support more buybacks if it intends to continue with these buybacks. As I highlighted, I did have Gigacloud Technology stock rated as a buy here, GCT buy, and I last updated this on April 11th, reiterating this buy recommendation, but I've had it rated as a buy for some time now. This was just the latest update where I reminded investors that I still rate this stock as a buy. Now, the company has performed relatively well so far in 2024. The share price is up to $38 per share after starting the year at around $18 per share. So one of the better performing investments in 2024. Moving on, the company reported marketplace gross merchandise volume increased by 64% in the trailing 12-month period ended March 31st, and active third-party sellers increased by 43.7%, whereas active buyers increased by 29.1%. When you're operating a marketplace, both sides of the equation are important. You need buyers and sellers, and they feed on itself. It's a positive, virtuous cycle. The more buyers you have, the more sellers are attracted to the platform. The more sellers you have, the more buyers are attracted to the platform. And it's just this positive, virtuous cycle that feeds on itself and keeps growing if you, as the operator of that marketplace, can continue to facilitate that growth. You've got to find ways to attract both buyers and sellers, making the platform more attractive for both sides, and that brings them together. So that's Gigacloud's job, is to make the platform more intuitive, make the platform more attractive for both sides, and just keep feeding that virtuous cycle, which so far it has done a really good job of. Not only are they attracting more buyers and sellers, but the spending per active buyer also increased by 27%. So the buyers are spending more, and that's really good news because that's attracting more sellers and that's attracting more buyers, and the positive cycle is feeding on itself. And that's great news for Gigacloud because it takes a piece of those transactions for itself. The interesting strategic change that I was talking about is here. And let me make it a little bigger so you can get a better view of it here. And they're introducing a branding as a service. And that's going to solve the issue of building a brand as a furniture company. It's difficult to build a brand as a furniture company, and this service is going to help the furniture sector, for businesses that want to capitalize on this opportunity. They're going to prepare this, and they're launching it in the second quarter. So they're just going to release this. It's exciting. Let's see the success. Let's see how it's received from the buyers and sellers. And I think it's going to be another critical data point for Gigacloud technology investors in Gigacloud's skill in introducing new services, new programs to the marketplace. And let's see how attractive it is. So revenue growth was excellent in the first quarter for Gigacloud, and the company expects that excellent growth to continue for the next quarter, forecasting total revenue to be between 265 million and 280 million in the second quarter, which would be an incremental increase from the first quarter. Now, it wasn't all great news for Gigacloud technology stock in the latest quarter. One area of concern I found is a significant rise in inventories. You see here in the same quarter the previous year, they only had about 2.3 million in inventories. That surged up to 56 million in the current quarter compared to the same quarter last year. I'll have to look more into the details for why this increased. My initial suspicion is that part of the acquisition, that one of the companies that they acquired had significant inventory, and that led to the increase in inventory year over year, looking much more significant. I'll have to look more into the details. It wasn't in this current report that I reviewed for this video. And the surge in inventory led to a decrease in cash flow from operations. In the same quarter last year, they generated 20.3 million in cash flow from operations. In this quarter, that fell to 15.3 million. Now, if you excluded this big surge in inventory, the cash flow from operations would have been much, much better. But nevertheless, this did exist, and it dropped the cash flow from operations down to 15 million in the latest quarter. So that was one of the things I highlighted, I noted from the quarterly release that was not great. That was a bit of a concern. Other than that, most other metrics looked very strong for Gigacloud technology in the latest quarter. So since the report was relatively strong and the valuation, after the release, the stock price is relatively flat, and the valuation is still relatively cheap, even though it's increased since I recommended it as a buy. It's still attractive. It's trading at a forward price to earnings of 10.43. Company's demonstrating nice growth, expanding the network, and you all know I like the platform business model where you bring together buyers and sellers. I really like that business model. Several companies I have rated as a buy employ that business model, including eBay, Fiverr, Airbnb. I could go on and on. I'm drawing blanks here. Etsy and others that Upstart, and these companies that Uber also is on my list of top stocks to buy, the platform model. They just bring together two sides of a transaction and they take a piece for themselves. I really like that business model. It's proven to be lucrative in several other instances, and this is yet another instance of that marketplace business model that I am attracted to. So I'm reiterating this buy recommendation here today on May 9th. Suggesting Gigacloud technology stock is still a buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.